Imagine a company that traded its pickaxes for a vault. Now it's trying to own a slice of Ethereum big enough to make whales look like guppies. Bitmine, ticker Bmnr, isn't your grandfather's Bitcoin miner anymore. Over the past 6-9 months, the company has consciously pivoted from legacy mining to building what it calls the largest institutional Ethereum treasury on the planet. That's not a slogan, it's a goal with numbers attached. Bitmine recently reported holding about 4.203 million ETH and said its combined cash plus crypto plus moonshots package totals $14.5 billion. The company's aim, according to the chairman, is to eventually hold 5% of Ethereum's supply. If you like big, audacious plays that sound borderline sci-fi, welcome, this is that. How did Bitmine get here? The pivot and the fuel. Picture a startup that sells its trucks, says, forget the mine, and starts buying islands. Okay, not literally islands, but that's the vibe. Bitmine closed an initial $250 million private placement that helped kick off the Ethereum treasury plan. The company used that and further funding to aggressively buy ETH instead of buying more ASICs and memory chips. That $250 million was the seed rocket. Why would a mining company do this? Two big reasons. Leverage on appreciation. Owning ETH directly gives you pure exposure to the asset rather than the messy, depressed margins of running mining hardware. Network effects. Ethereum is where tokenization, smart contracts, and stablecoins mostly live. Being a major treasury holder positions you to be relevant as institutions tokenize assets. The scale, 4.203 million ETH. What that actually means. Numbers feel abstract until you hold one up to a familiar object. 4.203 million ETH is a lot of tokens. At the price the company used in its update, about $3,211 per ETH, their ETH holding alone is worth billions, and when bundled with their cash and other holdings they reported $14.5 billion in combined assets. That's not pocket change, it's sovereign fund sized on crypto's terms. Put it another way, there are 20.7 million ETH in circulation, the company quoted that figure. Bitmine says its 4.203 M equals 3.48% of supply, so they're already more than 70% of the way toward a 5% target. That's the equivalent of saying, we've eaten 3.5% of the pizza, and we want to eat half the pie someday. Big appetite. The math behind the 5% thesis. Why 5% matters. Why 5%? It isn't mystical numerology. It's large enough to be meaningfully influential but small enough to be, in theory, achievable for a company with institutional backing. If Bitmine were to actually hold 5% of ETH, it would be one of the largest single institutional treasuries in crypto. That level makes headlines because a single corporate actor holding several percent of a protocol supply can be a catalyst for institutional legitimacy, and also a target for critics who worry about concentration. Think of it like a central museum buying a major chunk of a national art supply. That signal, and the conviction shown by the buyer, can bring other institutions to the same room. This is exactly the PR/market signaling Bitmine is going for, and that's why they keep repeating the 5% target. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Where the money came from, pipe and investors. The shift didn't happen with spare change. Bitmine completed a $250 million pipe to fund the initial strategy and attracted heavyweight institutional and well-known crypto investors to the story. That financial backing gave Bitmine the runway to start buying tens or hundreds of thousands of ETH at a clip. These structural moves, raising capital and dedicating it to a treasury, are what differentiate the approach from a wallet that happens to hold ETH. Recent buys, the needle movers. Small buys don't make headlines, big buys do. Recently, the company announced an additional acquisition of 35,268 ETH in 1 week, an example of the cadence they're trying to maintain. Frequent, material purchases that move the needle on ETH per share. These kinds of purchases are how they creep toward that 5% goal. Breakdown of the kitty. What's in the vault? On the company's recent update, they published the breakdown. 4,203,036 ETH, valued at roughly $3,211 per ETH for that snapshot. 193 BTC, about $979 million in cash, and a $22 million stake in 8Co, ORBS, along with other moonshot investments. That mix is worth the headline figure they've been using, $14.5 billion combined. It's crypto plus cash plus strategic bets. That helps explain the company messaging. They're not purely hodlers. They want a balance between liquid cash to buy into opportunities and a big crypto core that's meant to appreciate and be staked to earn yield. Staking and yield. Is Bitmine just hodling? Nope. Bitmine is not only accumulating ETH, it's also staking ETH to earn protocol rewards. Staked ETH supports the network and produces a yield, albeit a yield that compresses as more ETH is staked. The firm has been ramping infrastructure, including a product called Maven, to be a staking provider and to lock up large amounts of ETH into staking queues. That means the Treasury isn't totally passive. It also generates modest yield and helps secure the Ethereum network. If you buy a rental home and also rent it out, you both own an appreciating asset and collect cash flow. Bitmine is doing the ETH equivalent. Own the apartment, ETH, and rent it, stake rewards. Why market participants care: signaling, liquidity, and NAV mechanics. Bitmine is what I call a NAV-levered crypto play. Their balance sheet, ETH holdings per share, underlies a marketable NAV, MNAV. When the stock trades above MNAV, they can sell shares to fund ETH purchases, or vice versa. In practice, that allows them to arbitrage between their liquid equity and the underlying assets, a capital markets trick that can accelerate accumulation. Also, because Bitmine is visible and widely traded, institutional investors watching a major public actor allocate into ETH may feel safer doing the same. That's the signaling effect. One big buyer reduces friction for other large buyers. However, signaling requires liquidity. If Bitmine shares become illiquid, that strategy is harder to execute without moving the stock price. So liquidity is a risk/constraint to monitor. 3 real-world risks that could make you trim or exit position. Liquidity deterioration. If Bmnr's trading volume collapses, the MNAV arbitrage and tactical buying get painful. If they can't buy ETH without moving their own stock violently, that undermines the plan. Moonshots eating the Treasury. Bitmine has mentioned strategic investments. The user called them moonshots, e.g. ORBS, Beast Industries. If management starts diverting material capital to speculative projects before reaching the large ETH target, I'd get nervous. A few pilot investments are fine. Stringing together many will reduce clarity of the thesis. A better swing trade/need for cash. Personal portfolio management aside, if the company itself needs to prioritize cash for a bigger strategic play, or if institutional investors demand returns elsewhere, that could force reallocations away from ETH. In short, if priorities change, the thesis changes. Note this as well. Daniel 7 verses 25 to 27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws, and they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.